teacher Jonna of Accountancy, Business and Management. Welcome to our class in Fundamentals of Accountancy, Business and Management 2. We are now working towards the fourth week of our online classes. So, what's up with you guys? Are you coping well? I have prepared three video lessons in the past 3 weeks regarding the preparation of the statement of financial position or the balance sheet and the preparation of the statement of comprehensive income, also known as the income statement. And after each video lesson, there is an exercise that you need to work on. I know some of you have tried answering them, but if you failed to balance them, don't get frustrated. That is why I'm here to guide you all along. So now, take your pens and your notebooks and join me in answering exercises 1, 2, and 3. Are we ready now? Let's start our discussion on activity 1. Okay, activity 1 requires us to do the following. Letter A, analyze the simple transactions. Letter B, journalize the transactions as entries in the books. Letter C, you post the accounts using the T accounts. Letter C, letter D, prepare the trial balance. Letter E, prepare the statement of financial position or the balance sheet. And letter F, we may prepare it in two forms, report form and the account form. However, there is an adjusting entry of merchandise inventory at the end of 4,000 pesos. Activity 1 has 6 transactions. We will discuss this one by one, and we should take note that the adjusting entry of merchandise inventory at the end of 4,000 will be recognized later. So now let's work on transaction number 1. Juan opened a grocery with a cash investment of 100,000. Okay, when we analyze the transactions, the first thing we do is what accounts are affected in the transaction. Since this is an initial investment of cash, so there is an increase in the cash account. And since cash is an asset account which has a normal debit balance, so to increase your cash account, what do you do again? You debit it. Perfect. And since this is an initial investment again, we have to recognize the equity contribution of the owner, which is in the amount of 100,000. And equity has a normal credit balance. So debit cash and credit equity with 100,000. Number 2 transaction. He purchased land for the grocery 50,000. So what accounts are affected again? He received land. So land is an asset account and the normal debit balance of cash or of land is debit, and to increase it, you debit the asset account in the form of land. But since you paid for the land, or Juan paid for the land, he disbursed cash, which is another form of asset. But now, this time, we are decreasing our cash when we paid for the land of 50,000. So when you decrease your asset, what do you do again? Perfect. You credit it. That is why cash is credited by 50,000. Next, we have, next transaction is, okay, he earned 100,000 from sales. Okay, the sales of the grocery store is 100,000. So the accounts affected again are what? When you receive sales, that means you receive cash. And when you receive cash from the sales, you recognize your sales, which is a credit normal balance. So we debit cash because you receive cash, and you credit sales when you recognize the sales of the grocery by 100,000. Number four transaction. He sold items on account for 5,000 to John. Again, he had a sales, but take note, this is not anymore cash sales. This is sales on account to another client named John. Did Juan receive money? No. What did he receive instead? An accounts receivable from John. Accounts receivable is an asset account, and to increase your accounts receivable account, you debit it. So we debit accounts receivable from John, 5,000. And because this is a sales, though it is on account, still we recognize it as a sales, sales as a credit normal balance. So we credit 5,000 sales. Next, transaction number five. He purchased supplies for operations 2,000 on account again from Lita in Divisoria. So what are the accounts affected in this transaction? Yes, when he purchased supplies, he received supplies. So you debit the quantity, the goods received in the form of supplies, and supplies is an asset account. So you debit it, and you increase your asset account in the form of supplies. So you follow the normal debit balance of asset. We debit supplies by 2,000. Did Juan pay when he purchased the supplies? No, he did not. It was a purchase on account to Lita in Divisoria. So, since he did not pay money to Lita, what did he do? He incurred a liability which we call accounts payable to Lita in the amount of 2,000. And accounts payable has a credit normal balance. To increase your liability, you credit it. You follow the normal credit balance of liability, which is credit. Then he purchased merchandise for resale, 4,000. Okay. In the periodic inventory system, to account for the cost of the goods that you are purchasing, you use the account purchases. So, since he purchased merchandise for resale, we recognize purchases in the debit, which is in the amount of 4,000 pesos. But when you purchase the supplies, you disburse cash. So you credit your asset because you decrease it, you credit it by 4,000 pesos. Number seven, he withdrew, he withdrew 3,000 for his personal use. Again, sorry, we are still in number seven. He needed cash for his personal use, so he withdrew 3,000 from his investment. Again, may I ask you what is again the credit? The normal balance of equity or the investment of the owner? Credit in the form of equity. But since this is a withdrawal from his investment, to deduct your equity, what do you do again? Perfect. You do the opposite. You debit your investment, but you do not use the account investment. There is an account called drawing account, which you will debit it in the amount of 3,000 pesos. So, but because the company released or disbursed 3,000 pesos for the drawing of Juan, so a deduction from the asset account in the form of cash means you have to credit it. So you credited cash 3,000 pesos. And again, in the preparation of your financial statement, you have to acknowledge that there is an adjusting entry. At the end of the year, the merchandise was counted and it has an amount of 4,000 pesos, which is close to the income summary account. Now we'll prepare the ledger. To prepare the ledger, in this case, we will first use the T accounts. For facilitation, for our exercise purpose, we use the T accounts. Why is it called T? Because it looks like a T. we use a T. On the left side, we use the debit side. On the credit side, we use the on the right on the left side we use the debit, and on the right side we use the credit side. Okay, so in the T account of cash, you will notice that there is a number one, a number two. This number one tells us of transaction number one. Number two tells us of transaction number two. And on the right side, you will also notice number two, number six, and number seven. This tells us of the transaction number which pertains to that account. Okay. So after getting all the after solving all the journal entries, we can now post them here. For example, when we say transaction number one, 100,000, number two, and then we get the sum totals. After getting the sum of column of the debit and getting the sum of the credit, we get the net balance, and whichever side has the greatest number, we recognize that side. For example, in this case, the debit side is a greater number, so we recognize a debit balance of cash of 143,000. Then, sales account again has two transactions. Transaction number 3 and transaction number 4. So I think this 100,000 is the sales on cash, and this one 5,000 is the sales on account. So we have 105,000 credit balance of sales. Then the other accounts from purchases to equity, they did not move, or meaning there are no changes in the accounts. So we just copied them, the purchases, accounts receivable, up to the equity. Then now we can now prepare the trial balance. Okay, the trial balance will test the correctness of the debits and the credits. In the trial balance, you have to put the different accounts on the right balances, whether debit side or on the credit side. If you will notice here, cash, purchases, supplies, accounts receivable, land, and growing, they have normal debit balances. So they are placed in the debit column. Sales, accounts payable, and equity have normal credit balances. That is why you put them on the credit side, and then you get a total debit balance of 207 and the credit balance of 207,000. Then we have the balance sheet. Now you can prepare your balance sheet. How do you do this again? We put the assets on the left side. I think this is the account form. The account form balance sheet. May I repeat again on the heading of the balance sheet? One grocery balance sheet or statement of financial position as of December 31, 2019. In preparing your balance sheet or your statement of financial position, you may use the word as of, or you may not use them. But in the assets column, you put all the asset accounts. But because we have an adjusting entry of merchandise inventory, so we added merchandise inventory at 4,000 pesos. Cash 143, merchandise inventory 4,000, supplies 2,000, accounts receivable 5,000, land 50,000. So we have a total assets of 204,000. And for our liability, we have 2,000 accounts payable, equity beginning 100, income. So you will notice that the income, okay, we did not prepare our income statement, but I think this is a hypothetical figure. Then we have a drawing account of 3,000 and total liabilities and equity of 204,000. We should always see to it that the total assets is equal to total liabilities and equity. This is what we call again the basic accounting equation. And now you were able to prepare your balance sheet. And so here we end our activity one. If you have reached this stage, I would like to congratulate you. You can now prepare your own balance sheet. And for the next exercise, We will also try to prepare an income statement. Again, this is Teacher Jonna at your service. Thank you very much for watching, and may God bless everyone.